The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Pleased to be back. Had a bit of a break last week. I did a lot of work, I must say, but certainly being away and getting to do what I love here in the marketplace, and also getting to see family was really important, and that's great. So, a couple of things I just want to do. In the Boston Globe yesterday, there was this front page article on parking spots. Now, I haven't had a chance to do it, but I'm going to be doing it over the next couple of days. I'm going to try to find it because it's vivid in my mind, but I don't remember the exact time frame. When last we saw a bidding war, it was in Beacon Hill at that time, for parking bays, and it went to $120,000, maybe a little more, and we thought, wow, parking spot. You could have bought in the 1970s, you could have bought a whole building for that. And now parking bay, that was one bay. Well, two bays went yesterday to this lady who has a $5.6 million townhouse on Commonwealth Avenue, and need a little space for the guests and the workers. A little extra. Already has a couple of places, and she got outbid by someone who actually wanted it for a more specific reason. At $560,000. Now, what is it? It is, if anybody knows the Back Bay, if you know Commonwealth area, Marlborough, Commonwealth Avenue, really a lovely, lovely area. Not quite as fancy as Beacon Hill, but pretty close. The parking bays are really tiny. So this is a two-car spot, but there's no, I'm not even sure there's going to be room to open on the doors on one of the sides. But it is so tiny, and all it is it's one bay that's split into two, so your nose, rear end to front end to park. It isn't side by side, so you got this fancy place, but you still have to get out to go and move your car if one of the parties has to move it before the other. 560. This is now for parking of the back of I believe it's the back of Commonwealth Avenue, in between that little alley that goes to the houses, to the apartments on Marlborough Street. That would be the north side of Marlborough Street. So I'm just guessing. Actually, I shouldn't even say that. I don't know whether it's north or south. So it could be Newbury Street that it's back off. But whatever it is, it's a parking right by the trash cans and things. So I thought that was really interesting because it's telling me a bunch of stuff. Now, I've also been looking around a lot in the Brooklyn area, and I have to tell you something, that it is getting to the point where I can see maybe one season left if it continues at this rate. But then we're just back to where we were back in 2005 and 7. So I'm watching this real closely. In the Boston area, I now know firsthand of bidding wars. So bidding wars tells you that there are people that are going a little crazy because they feel they've got to do it. They've got to do it now. Normally these are new buyers. If they've bought before, they'll know that they can have patience. Eventually they'll be able to get what they want. But I'm also hearing stories where people are buying and saying, we won't, it is not contingent upon the home inspection, and it's not contingent upon a whole bunch of things. In fact, I heard a story about a place that went in Brooklyn the other day, and it went for a really good price, even though there is a lawsuit. In fact, the lawsuit brought the place down from $600,000, just a two-bedroom or something like that, from $600,000 down to $400,000 just a few years ago, and it went for just under $1 million. And contingent with that is the fact that they're the spouse of the buyer still has a legal case on the house. Well, when you get to that kind of extreme, you got to say to yourself, oh, okay, let's just step back a minute. We'll talk about that over the coming week or weeks. I just wanted to mention it because these are highlights. These are very important aspects that I look for in my market line, my trends watch aspect. And in terms of where it goes from here, I have to pose a question. And I'll pose it in terms of where we are in the market. Look at this. If you're looking at the charts that I'm showing, the one on the left at 1642.50, peak A, has just gone to 1641. It's $1.75 off, making leg B. This is the E-mini. Within the context of the 100, that's the daily chart. Within the context of the 120-minute chart, it's about to retest left side, right side price time match in about 4 bars early in the 120-minute chart, the 1642.50 area. But that's really not the issue. The issue that I wanted to talk about now, and I mentioned this to my subscribers in my opening call. What is my opening call? It's my daily service, a very, very comprehensive look at the markets. We have positions in place. We had, in fact, 3 short positions. One is still doing very nicely. One was taken out this morning for a 1.68 loss. The other is right at this moment, as we speak, plop, just about to be taken out, and that's for a 20-cent loss. That's a short position. But what's fascinating to me, 2 out of the 3 didn't work, 1 is working. What is fascinating to me, and this is to absolutely key, is that I say to subscribers, I refuse to knuckle under to big sweeps in the market. There's a rotation going on, and this rotation says that we very well could see the sectors that I've chosen stocks in to be doing well against the backdrop of many areas that are very overbought. These others are oversold. To that aspect, we're looking at some really nice gains. We actually got out of a position last week that had a fabulous percentage gain, and then I wrote it down. I can't remember now what it was. Oh, I just have been so busy now. So many numbers were flying around. I believe that it was a 68% gain, 64% gain in the remaining position that we had on the long side. And we've gone to the short side, and that short side is now actually working to the downside, and that's very good. That's number 1. Number 2 is there's a stock that we have a half position in still, which is up some almost 80% in the half that's remaining. And that's telling me that that's a turnaround sector, a turnaround stock, and that's why you've got to be very independent-minded in this particular market. Then we grabbed a couple of stocks recently, and both are doing real well. One is up today, up over 2%, and the other is up over 2.8, was up over 3% earlier on. And that just tells me you've got to be focused here. Now, let me go to the chart that I wanted to talk about. This pattern that I'm looking at in the ESU, this is the S&P E-minis, has the potential, and I'm saying potential, I don't know yet, to become a very powerful, successful H pattern. Now, for those of you who know my CD introducing the Chapman Wave methodology, you know I talk about this very often. Won't show it now, but I'm going to show the pattern. And that is when the left side of the decline, sharp decline, is retested successfully, it says it can very well go from the left side low bar and retest the previous arch high, and that's the high of 1648.50 that was made on the 10th of June. Now look at this. We are at this particular point at 1641. If there is a close today into this candle right here, the candle of the 31st of May, into the 1640, I call it 1644, 45 area, then that high of 1652 becomes the potential target. That's number 1. Number 2, finally, the MACD, which looked very ugly last week, finally what it's doing is it's seeing that the MACD is starting to turn around the fast-moving average. But look at this. There's been a positive divergence in the stochastic from that low, 1591 on the 6th of June, to the low of the 13th last week. So that says, yes, this could turn around. If the MACD does turn positive, that's going to be that's going to be bullish. So I did not want to stand in the way of any freight train. I hate that. I'll get out. I'll go back into the short side if I see that. But at this particular point, we only have one short. We've got longs. I did not add to the longs, but I am trying to add to the short position. And that short position is making it difficult for me to get in. And that's telling me I think I have my eye on the prize. I think that this is going to be a very weak sector coming up into July. June, July. So that's the way we're looking at it. Now I have a question in the den. I have a couple of questions in the den. And I'm going to go to that. But first, let me just do this. I don't see Bloomberg up. I'll just run the numbers. Let me just run the numbers as I do the charts. It's easy enough. Dow. The Dow is up. We've had moves like this. Do you remember up and down every other day that went on like, October, November of maybe 2008? It was just an incredible thing. And that's like I always love this because it's like a dog that comes out of the water. You know how the dog comes out of the water and then it's four legs. It goes like the Eiffel Tower. It just sticks him into the ground and it shakes its body. And the water flies around. Everybody gets soaked. And the dog just calmly walks off, right? Well, I love that because that is tensile strength. It is like it's like a spring-loaded how can I call it? Like a spring-loaded fulcrum, like a consolidation pattern. And it tells you that can go on for a while until at some point it's going to break, and it could break either up or down, and that's where you have to do your homework. So now let me do this. On the Dow, the candle to break above and close is the candle of the 10th at 15,300.84. I'm suspecting at this particular point, because of the pattern that I'm looking at, that there is a chance that the dreaded H, that H pattern that I talk about in my CD introducing the Chapman Wave methodology, the one that I just showed you, can in fact turn into something like this and frustrate the bulls and the bears as a rotational correction unfolds, and that's the pattern right there. Now, why do I mention that? I mention that because the volatility index, the VIX, VIX.X, is right now at 16.70. It's only down 45 cents. In fact, it hasn't taken out the low of this past Friday. It's holding the 9-period exponential moving average. And I'm suspecting, now this is the reason why I thought about this long and hard. Should the positions that we were short, should I make them the original stop that I wanted on one, which is a 1-point stop on a 35 for the $4.50 stock, or should I tighten it up? I wanted to tighten it up because I felt very strongly that if I'm correct that this is going to be the H pattern, I will know by later today, and then I can set something in place with a greater degree of comfort. But I did not want to risk that extra 40 cents for nothing. I'll be back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Had many questions in the day when I look at certain stocks. I'm going to do that now. And I just wanted to do a couple of things. I forgot Tommy's doing the that all day like a Master Trader series for the benefit of those who got the Tiger dollars. That's fantastic. Wow, what an opportunity. And then I had a question, just an email question. What was your percentages again on the gains that you had? On one, initially we had 21% gain. And we took off half, and we've kept half, and that other half now has a gain of, I should remember this. I had it written down. I should have remembered it. 3.13, I think, right. At this particular, I think it's 75% right now. And the other one had a gain of 42%, and then the small remaining part that we had until we took it off is 64%. And that one is the one that we are short. We switched positions, and that short is up about a point from the 25.71 area. So it's at 25.71. It's at 24.66 right now. So just to clarify, now the questions I had. Let me just do this because it's important. I just wanted to say the IWM right now is up. It's the same kind of pattern, up 83 cents. It's made a peak. I haven't gone to the weekly charts on these. I need to do that. I want to do everything this morning. So let me just do this. So IWM is up, but it's making the M pattern from the PD in the weekly. It has to break 100.38, and it's at 98.55 right now, just real quickly. And I want to do GLD, I'm just seeing nothing in the GLD, nothing there. There's nothing there. And the dollar is still continuing to decline. It's trying to test lows. It's flattening out in the stochastic. It's just, I got a target of 80.26, and the index is at 80.72. The EUR USD right now is at, making a peak E with a very nice high-level consolidation. 1.327 is the major support. It's at 1.333, and it needs to spike above 1.33 893 to start to extend this leg that is in to start leg F/B, and the weekly chart says, hey, you could make a cup formation and even go a little higher. So that I want you to do. And then real quickly, I wanted to say TLT at this particular point is down 8 cents at 113.74. You know, Fed is trying to prop it up, and the Fed is trying to knock the dollar down. Just keep it simple. All right, here we go. We've got we've got a caller online. Love to get callers online. Let's go to Alex in New York. Hi, Alex. How are you?
Okay, Basil.
Good.
Almost by accident, I had an order, a good till cancel buy on HK, Halcon Resources.
Yes.
At $5, and it got filled last Thursday when the stock sort of fell out of bed.
Yes, very good.
For a reason. And now it's like
$5.77. It's $5.77, up 24 cents from the close of Friday. Okay, so I'm not sure what your reasoning was, but this is a potentially a very nice bounce stock. I call it a bounce stock because the monthly needs a lot of work. Now, let me just do this. HK is, in fact, Halcon Resource Corporation. Some of these resource companies have actually had nice little turnarounds lately. This, to me, you see now, A, B, C, D, E. So let me just explain something to you real quickly. If you're looking at the weekly chart, it initially started off, same kind of thing, starts off slow, and then it just accelerates like crazy. D, E, F. I actually made a peak F in the Chapman wave from the low bar, I'll give it to you right now, back in the week of the 12th of August of 2011 at $1.80, and it soared. When I say soared, it went through the 200-period moving average. It went right through the previous high back in March of 2011 of 774. It just took off and went straight to peak F at $13.39. That is a 1,200% gain. What has happened is pull back very steadily in what we would call a stair-step move, but the H pattern has become a larger H pattern, and that's usually the sign that it is getting extended to the downside and is trying its best now to find some footing. Well, it took out the 526 low of the week of the 16th of November of last year. It went to 4.92. But it closed both times. Let's see, it closed 528, 533, 553, and the low itself was 5. Oh, that's a positive divergence. So that says that this stock on a weekly basis is seeing the signs of a potential turnaround, but still within making the H formation. So what do I look at? The 9-period exponential moving average in the weekly right now is at 5.91. The stock is at 5.78. Made a high today of 5.85. I think you got filled perfectly. Wow, I'm really impressed at your choice because it only went a little bit lower. I'm going to do a little work over the break, and we'll be back. Congratulations, first of all, Alex in New York. That's a great entry on HK. We'll be back. It's trading up 24 cents at 578.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We're back. And Basil Chapman, Target Editions Hour, Monday through Friday, 11 o'clock till 12. And 877-927-6648. Dow's up 165. S&P's up 17. Now, let me just run these down here. The comp indexes... the Q. Let me just do the 3 Qs. The Qs are up at 73.35. You see, this is the same pattern, Peak D. It needs to clear, decisively clear. It can do it, but it's got to do it with that MACD crossing positive and holding, 73.76. I'm on right now with Alex in New York. We're looking at HK, and HK has had a fantastic percentage move today, 4.43% at 578, up 24 cents. It was even more just earlier. It was up at the 585 area. Alex got in at $5 and was almost low. It was $4.94, I believe, is the low. $4.92 was the low.
$4.92 on the 13th.
Fabulous. Now, okay, 2 things. Number one is, I'm going to request, you think about this. This is something you obviously have to do. You know your portfolio, you know exactly what's going on. I would treat this as 2 positions. You've got one position at a fantastic price. That position, I would make sure that I took no loss whatsoever. In fact, I would have to say that the candle of Thursday, the candle of Friday with a low of 529, just a little below that 520 is where I'd start watching a core position and say, I don't really want to give that back. I got to be a bit careful. The other half I would treat as a position that's a trading position that you might not have to do anything with, but I'd keep it as a secondary position. Actually, a primary position because it's a trading position, but your core position really is the primary position because it's the base is so low at $5. But the one that you're going to focus on is the shorter term one. And reason being, I've only got leg B up in the 120-minute chart. My eye says there's a real good chance that $5.93 to $6.03, 601 is the 200-period exponential moving average resistance line, but the MACD is really strong. The stochastic is very strong at 91%. That candle, that very ugly candle of the 23rd of May that broke down from 6 going down to 545, that's the high. That area is the high that I would target. If it gets there, the half position that you have, you can even divide it up, the half, into quarters and say, you know what, this is a fantastic percentage move. It's not a great looking stock in terms of the monthly chart. They had what I call the Eiffel Tower straight up and then straight down. But the weekly chart has a potential to go to $7.05 if everything comes together, number one. Number two is, I suspect that we're going to get some kind of a rollover in the market. I'm suspecting that. I'm trying to plan for it. I'm looking at more and more short positions besides looking at longs. But this isn't resources. I don't know exactly which resources they're in. But it is extremely oversold in the weekly chart. So it could bounce. Now, this is what I would do. If it goes to $5.86 to $85.89, or if it's very quick and goes to $5.90, one part of your position should have a stop raised quite a bit more. I'd say around about 575, 576. The other part of this trading position can have a stop that says if everything is intact and it still keeps going and it doesn't pull back to 576 but continues straight up, then I'm going to take something off to reward myself in that smaller, like the quarter position, anywhere in the 590s, and then keep the other part as your quarter that you have to handle. The core position that you have right now, I love it. I think you got it in the perfect spot. Let's keep looking at this. You've got the position. Congratulations. I want to see where it is Wednesday, and call me Thursday if you have a chance and you're still in the stock. Call me Thursday.
I've been a little spoiled in this stock, because I sold it once when it went over $8.
Did you call me about this before?
Yes, I did.
Yeah, I remember. Now I remember. So, yeah, and I said to you, you've got a very good eye for the stock. I remember it's coming back to me. And you've got a good eye for the stock. So I don't really want to tell you what to do. I'm just making suggestions that's kind of the way I would plan it.
I am looking at something fundamental in the stock.
Oh.
That's the reason I follow it.
Okay, well, if you're looking at something fundamental, I'm going to make another suggestion. I'm going to say keep your core position and only use a half the position, because you obviously have a bullish fundamental look towards the longer term, and you've been very good so far. And that other position, the half, the 550 to 543 areas where I'd be watching it real closely. So, hey, fantastic. Hey, give me a call later in the week. Tell me how it's doing, okay?
Yeah, I never expected to get that $5 filled. That really surprised me.
You are filled, and I'm sure you didn't expect when you get it filled that within 2 days it would jump up over 12%. So I'm saying to you, I would think about at least rewarding yourself a little bit, keeping a core position. I don't want to change your thinking. That's the trade. You asked me about it. I love it. I would say it's going to collapse. If it breaks under 520 in the next 3 sessions, then this is just a news-related item. If it holds, and it holds about 550 to 543, I think you get yourself a real nice trade, intermediate-term trade. Hey, thanks for calling, Alex. I appreciate that.
Thank you, Basil.
Thank you. So LinkedIn is one that we want to look at. So here we go. LinkedIn acting really well. I can kick myself because, I looked at this and I thought on a percentage basis, a big deal. It goes from the 160s to the 180s. I've got other stocks that are way low priced, doing much better. But that's not your thinking. The thinking is where can it go, not the price. LinkedIn is looking real nice right now. It's trading 179.32 up $1.08, and the MACD is rallying, but the stochastic's only at 66. That also kept me a little bit nervous, just thinking that it could make the H pattern that goes to an M. But this action between Friday and today is so far very good. I like it. If you're in LinkedIn, a longer term position, this could be the low that I was looking for the retest. And I even said 158, I think at the time, 161 to 157 would be my target, and the low was 160.20. So I got a feeling that in a way it's sort of done. I'd be real careful though if it gets to it's at 179. If it gets to 185 to 186 and a half, 187, and then makes an H pattern by arching over and turning down, then I say nope, it's not ready yet. But so far, if you're in it, nice action, really good. That's number one. Number two is, where would the support be? LinkedIn, LNKD, trading at 179.30 up $1.06. The 173.03 is the 9-period moving average, but that's not it. If it takes out the low of 171.60, the low of the 14th on Friday, and it does it within, today's Tuesday, Monday, by Tuesday afternoon or Wednesday morning, I'd say, uh-oh, that's a real problem. If it acts well like this and it keeps on trying to get into that full candle that I'd spoken about before, between 187.30 on the 24th of May, the weekly, and 170.80, if it gets into that candle, it might want to test the wick. But that opening of 182.04 is going to be absolutely critical, just 3 points away. If you're in it, stay in it. If you want to buy it, it's a real tough call for me because I like it with the stochastic and MACD. The technicals are not yet saying that this is actually going to go back to the previous high, inverted Roman candle at 202.91, the high of peak D. It is peak C or leg C in the monthly chart. I would say if you want to be in a small position, I'd even rather trade play a call position than actually put up that kind of money for it right now. I'd buy a small position with a stop under 176.12, the low of today. Why? Because if it pulls back and makes a peak B, what's the high today? Oh, it made around number 180. Oh, if it goes to 180.01, that'll be a good positive. But if it does this, if it pulls back and it goes underneath 177.21, I'd be a little cautious. But if it holds above 177.30s and then goes to leg C, you've got yourself a nice trade because then it should go to leg D. So that's my assessment there. Next thing I was asked about is I had a subscriber asked me about SPPP. And that he said was, in fact, Sprott Physical Platinum and Palladium Trust. You know, I looked at Palladium, PL. I think I went to the Q. I'm not sure anymore. Do this real quickly. I'm back on these charts. No, it has to be PLU. No, PL. I'm just going to grab an N. Let's go to July. Yeah, I just wasn't happy with that chart. It's got a peak D in the weekly. I'd hold off on the SPPP. I don't see anything yet, and even if I do, it's just going to be a bit of a bounce. So looking at that, I'd say hold off there. Another question from a subscriber, SPY. Is the SPY making the pattern that I call the falling axe pattern? Yes, absolutely. It could be. I had that in here, but now we can raise that and go to that's that, and that's that. Absolutely. That's one of the reasons why I always say fighting positions here. But I'm thinking more like an H goes to an M. If the SPY breaks out decisively above 165.22, let's go to 166.10, then I have to say, we're going back to the top. But at this point, I have to let the day play out. I think I'm a little sorry we were out of our short positions on the indexes. But you know what? I just wanted to keep the stops tight. I don't want to give back gains when there's such fabulous gains. I just start nibbling, and I didn't want that. So we're going to Kevin in Sacramento. Hi, Kevin. How are you? We'll be back with our Tiger Den people who wanted questions. I'll answer those questions in a moment. Kevin in Sacramento, how are you doing?
Good, Basil. How are you doing?
Very well, thank you.
See, as I'm looking at Biogen, symbol BIIB.
Trading at how much?
I've got options that expire this Friday. I got a 210 by 200 put spread, and I'm in actually for a credit because I sold the 185 puts to pay for them.
Okay, so in fact, at this particular point, as long as it kind of holds here, you're looking good because that credit's working for you. What you really want is that your bias is for it to be pulling back. It's at 212 point. It's at 212.75 right now, up 75 cents. I must tell you that however I look at these biotech, the biopharmas and the biotech stocks, I think they've made their. I could be wrong. They've done this before. I think they've made their top for this particular cycle. Peak E in the weekly with a doji top in Biogen, BIIB. It's peak F. If there's the way it's looking right now, it should be a peak F. It could recycle, but everything about it, the way it's acting so far this month, looks to me like it's a peak F. Peak D with a silent doji. Made a high of 242.64. It's down 30 points already, and it can't find any strength in any upside action. It just can't hold it. I think you're going to look good. Here's what I'm going to do. In the 120-minute chart, the magnet is 213, run about 213.60s in the 200-period moving average. It was support, it's been resistance, back to being resistance. I'm going to go out on a limb, and I'm going to suggest you've got Friday, this is July. So this past Friday was the 13th. So you've got a week to go?
Yes.
Okay. I'm going to go out on a limb here. I think that Biogen, BIIB, is going to retest the 204.12 area. Of course, you'd like me to say tomorrow, tomorrow or the next day.
Yeah, Thursday.
But but that's the thing. I suspect that if Biogen BIIB breaks 208.42, the low of Friday, if it closes underneath it, it's just going to be a real quick slide. And I would not be surprised if an options expiration, they try to take this down, not to 210, but to 205. But that's only if it breaks 208, and it needs to do that. I'd have to put it by Wednesday at about this time, within an hour of this time. That's what you want to see. Why? Because not only will you get the full fruition of your trade, but you'd also be looking at the chance that, so actually, is it to your, it's to your advantage if it goes below 210, right?
Yes, absolutely.
Yeah, that's right. I was just, when it gets a little complicated, sometimes you want it to stick right at the strike, because if it goes too far down, it negates some of it. But you're right in the exact position. You know what? I love your trade. I think it's going to work. Call me and fire me if I'm wrong.
Okay, that sounds good.
I tell you what, 216.30 was the 9-period exponential moving average. It went to 216 round number today. It's already back to 211. I think you got a great trade. Good, you're good at this. I have to congratulate you. Hey, Kevin, congratulations.
Thank you, Basil.
Okay, thank you for calling. We'll be watching this one closely. Let's go to John in New York. Hi, John. How are you?
Not bad, Basil. How are you?
I'm very well, thank you.
Great. I wanted to find out what your thoughts are on XLF, in particular the April low. It made like an ABC. It never made the D. I want your opinion of where it's at and what it looks like.
Oh, that's a great question, because you're going to learn something. In the Chapman way, folks, what you look for is the most identifiable low bar. The XLF is the S&P Select Financial Spider Fund. It's trading at $90.70, up 23 cents, up 1.18%. The Dow is up 1%. The S&P is up 0.97%. I want to look at this and explain something. I've got it here in the charts there. It's just come up. Great. You'll see a C1, C2. I hope you're looking at the charts on Tiger TV, John, because I want to explain something about C1 and C2, and I'll be right back. Basil Chapman, Tiger Ignitions Hour.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. During the break, I was able to get to those the folks in the den who asked me questions about stocks. Now, I'm going back to this XLF, which is the S&P Select Financial Spider Fund. John New York is looking at it and had a question about the previous high, and now let's go. The low bar that I'm looking at is the low of 17.75 on the 18th of April, and then it goes peak A, which is alternate EA. I called it A on the 25th of April. Leg B goes to peak B at 19.33 on the 8th of May, and you get a peak C at 20.35 on the 22nd of May. And what happens is it goes under the 9-period moving average, that black line. Look at that, the fast moving average of the MACD is stochastic, holding up there in the 90% area or 86% area. All of a sudden, it pulls back, and then it fails. Instead of going to a 20.35, 20.36, I should say, for leg D. Instead, it fails at 20.24, 11 cents lower. But look at this. If you do a vertical line, you'll see that at this particular point here and at this particular point here, you've got a divergence. At that point, when it was trying for leg D, the MACD deflected lower. The stochastic was way down below 80%. That's what I call a Chapman wave peak C1 to a C2. And C2 is, in fact, an alternative to a D. It's saying everything was there, but it just couldn't go that extra distance to D. I found that when I do that, you remember with the euro when Peter would call in and we'd be looking at the euro, how many times it made C1 and C2 was in fact the sell signal? That's exactly what's happened here. I don't think this is fantastic action with the XLF, but it's okay action. It could even turn into an oval pattern. So the question is, the C2. So, John, you understand how I got that C2 with a plus sign. Actually, what I normally do now is I make that plus sign red as if it was a down arrow. And it's pulled back, but it's holding quite well. Now, the question on the XLF is really what? Just that, or what are you looking for?
What to look for? Should we expect D, or is
no.
it going into a bearish mode here? What more likely?
It's a good question. What happens is that D can in fact unfold, but it has to unfold in a fairly reasonable amount of time. The time it takes from C1 to C2, if it extends a bar or two beyond that in another U pattern, it could make a D. At this particular point, if it had to restart, I would call it leg B if it went above 20.09 without taking out the 1922 low. And then if it overlaps, the moment it overlaps and goes above 20.35, I would re-pick that up and call it D / whatever it is. Why? I have no need to worry about whether it's a D or a B or anything if the technicals are very strong. In other words, the MACD is still very negative and stochastics at 41%. This doesn't have the oomph. I think that the XLF is telling us that this is an artificial move. One of the reasons why I wanted to be short and the indices were actually out of that position. But if I can just tell you this, that if the XLF over the next 2 days, instead of breaking above 19.94, especially 20.09, pulls back and takes out the low of Friday, 19.51, I've got a confirmed peak F in the weekly chart, and that's going to say, hey, maybe it's a brand new A, but I don't think so. I think there's an F, and everything about the technicals are saying needs a timeout. It doesn't. In this particular move right now, it doesn't say it has to be a smash to the downside. It's just saying be careful, because if the XLF takes out the 19 support in the weekly chart, then it could quite easily go back to 1850 to 1810 as a consolidation, which would be fine. It's leg C in the weekly, in the monthly. So I hope that helps you.
Great. Thanks, Basil. Appreciate it.
Okay, very good. Thanks for calling. That's a very good question. So now let's just do this, folks. Let me just sum up what I'm looking at. I'm looking at these charts, and I'm saying, hey, I've drawn this in. We've drawn it in many times before. I'm looking at the H, probably making an M pattern. Many people are now looking for a retest of the recent high, 50,542. I'm saying, you know what, if the Dow cannot break, I think it was 50,000. Yeah, if the Dow cannot close about 50,300 and instead closes today more in the 50,180s, I think most of the move is done. I'll be back tomorrow. Stay tuned for Larry.